South Korea is making a strategic shift that's starting to ripple across global energy markets. And it's the kind of move that doesn't just make headlines for a day, it signals something deeper, something long-term. For years, South Korea has been heavily dependent on Middle Eastern oil imports, relying on countries like Saudi Arabia, Kuwait, and the United Arab Emirates to fuel its industries, power its cities, and sustain its economic growth. That dependency has always come with risks, geopolitical tensions, supply disruptions, and price volatility. Now, quietly but decisively, South Korea is turning toward Canadian oil, and this shift could reshape not only its own energy security, but also the dynamics of global oil trade. To understand why this is such a big deal, you have to look at South Korea's position in the world. It's one of the largest economies in Asia, a global manufacturing powerhouse, and a country with virtually no domestic oil reserves. That means every drop of oil it consumes has to come from somewhere else. For decades, the Middle East has been the obvious choice because of proximity, established supply chains, and competitive pricing. But the global energy landscape is changing, and South Korea is adapting faster than many expected. Canada, on the other hand, has long been one of the world's largest oil producers, with vast reserves concentrated in Alberta's oil sands. The challenge for Canada hasn't been production, it's been access to markets. Much of Canadian oil exports have historically gone to the United States, often at discounted prices due to limited pipeline capacity and bottlenecks. For years, Canadian producers have been looking for ways to diversify their export destinations, especially toward Asia, where demand continues to grow. This is where the interests of South Korea and Canada begin to align in a meaningful way. South Korea wants stable, reliable, and politically secure sources of energy. Canada wants new buyers willing to commit to long-term contracts. What's emerging is not just a transactional relationship, but the early stages of a strategic partnership. One of the key drivers behind this shift is energy security. South Korea has been watching global events closely, conflicts, sanctions, shipping disruptions, and recognizing how vulnerable its supply chains can be. The idea of relying too heavily on one region, especially one that has experienced repeated geopolitical instability, is increasingly seen as a liability. By diversifying its sources and including Canadian oil in the mix, South Korea reduces its exposure to those risks. There's also a logistical dimension to this shift that makes it more viable than it might have been a decade ago. Advances in shipping, improvements in infrastructure, and the expansion of export terminals on Canada's west coast are making it easier to transport oil across the Pacific. Routes that were once considered inefficient or too costly are becoming more competitive, especially as global oil markets evolve and new trade patterns emerge. But this isn't just about logistics or economics, it's also about politics and trust. Canada is viewed as a stable, democratic country with strong regulatory frameworks and a predictable business environment. For South Korea, that matters. Long-term energy partnerships require more than just supply. They require confidence that agreements will be honored, that policies won't shift overnight, and that the relationship can withstand global turbulence. At the same time, Canada benefits from this relationship by gaining a foothold in one of the world's most important energy-consuming regions. Asia represents the future of oil demand growth, even as the world gradually transitions toward renewable energy. By securing buyers like South Korea, Canada positions itself as a key player in that future, rather than being overly reliant on a single export market. Another layer to this story is how it fits into the broader energy transition. On the surface, increasing oil trade might seem at odds with global efforts to reduce carbon emissions, but the reality is more nuanced. Countries like South Korea are pursuing a dual strategy, investing heavily in renewable energy and clean technologies while still ensuring they have reliable fossil fuel supplies during the transition period. Oil isn't disappearing overnight, and for industries that depend on it, stability is essential. Canadian oil, particularly from oil sands, has often faced criticism for its environmental impact. However, there have been significant efforts in recent years to improve extraction technologies, reduce emissions, and make production more sustainable. These improvements are part of what makes Canadian oil more appealing to buyers who are under increasing pressure to consider environmental factors in their procurement decisions. There's also a strategic timing element at play. Global oil markets have been in flux, with shifting alliances, evolving demand patterns, and ongoing uncertainty about future supply. In this environment, countries that can move quickly to secure advantageous partnerships stand to gain the most. South Korea's move toward Canadian oil isn't happening in isolation. It's part of a broader recalibration of its energy strategy. What makes this development particularly interesting is that it could trigger a chain reaction. Other Asian countries, watching South Korea's approach, may begin to explore similar options. If Canadian oil starts flowing more consistently into Asia, it could alter trade routes, influence pricing dynamics, and even shift the balance of power among major oil exporting regions. For Middle Eastern producers, this shift is something to watch closely. While South Korea is unlikely to completely abandon its existing suppliers, even a partial diversification can have significant implications. It introduces competition, potentially affects pricing, and forces traditional exporters to rethink their strategies to retain key customers. For Canada, the opportunity is substantial, but it's not without challenges. Expanding exports to Asia requires continued investment in infrastructure, including pipelines and port facilities. It also requires navigating environmental concerns, regulatory hurdles, and domestic debates about the future of the oil industry. Balancing economic opportunity with environmental responsibility will be critical. Meanwhile, South Korea will need to manage the complexities of integrating new supply sources into its existing energy system. That includes refining compatibility, transportation logistics, and ensuring that long-term contracts align with its broader energy goals. It's not as simple as flipping a switch. This kind of shift takes planning, coordination, and sustained commitment. There's also a financial dimension that can't be ignored. Oil markets are influenced by a wide range of factors: currency fluctuations, global demand, production levels, and geopolitical developments. Entering into new supply arrangements involves assessing risks, negotiating terms, and ensuring that the economics make sense over the long term. For South Korea, the decision to increase imports from Canada reflects a calculated bet that the benefits outweigh the uncertainties. What's becoming clear is that this isn't just a short-term adjustment. The phrase, "and it's only beginning," captures the essence of what's unfolding. Early shipments, pilot agreements, and initial contracts are likely just the first steps. If the partnership proves successful, it could expand significantly, encompassing larger volumes, longer-term commitments, and potentially even collaboration in other areas of energy. That could include joint investments in technology, research into cleaner energy solutions, and cooperation on issues like carbon capture and storage. Energy relationships often evolve into broader economic and technological partnerships, and there's potential for that here as well. Another aspect to consider is how this shift intersects with global trade dynamics. As countries reassess supply chains in the wake of recent disruptions, there's a growing emphasis on resilience and diversification. Energy is a critical part of that equation. By building stronger ties with Canada, South Korea is not just securing oil, it's strengthening a broader economic relationship that could have implications beyond the energy sector. The ripple effects could extend into shipping, finance, and even geopolitics. Trade routes across the Pacific may see increased activity. Investment in port infrastructure could accelerate, and new financial arrangements could emerge to support these transactions. Each of these developments adds another layer to the story. It's also worth noting that public perception and domestic politics will play a role in how this unfolds. Energy decisions are rarely purely technical. They're influenced by public opinion, environmental advocacy, and political priorities. Both South Korea and Canada will need to navigate these factors as they deepen their relationship. In South Korea, there's growing awareness of the need to balance economic growth with environmental sustainability. Any increase in fossil fuel imports will be scrutinized in that context. In Canada, debates about the oil industry's future and its environmental impact are ongoing, and expanding exports could intensify those discussions. Despite these challenges, the underlying logic of the partnership remains strong. It's built on complementary needs, shared interests, and a changing global landscape that rewards flexibility and foresight. South Korea's move toward Canadian oil is not a rejection of its past. It's an adaptation to the future. As this story continues to develop, there will be milestones to watch. New agreements, increased shipment volumes, infrastructure projects, and policy announcements will all provide clues about the direction and pace of this shift. Each step will add clarity to what is currently an emerging trend. What makes this moment particularly compelling is that it sits at the intersection of so many larger forces: energy security, economic strategy, environmental considerations, and geopolitical change. It's a reminder that even in a world moving toward renewable energy, oil still plays a central role, and decisions about where it comes from can have far-reaching consequences. In the end, South Korea's turn to Canadian oil is more than just a supply decision. It's a strategic move that reflects a broader rethinking of how nations secure their energy in an uncertain world. And if the early signs are any indication, this is just the beginning of a much larger shift, one that could reshape not only bilateral relations between South Korea and Canada, but also the global energy map in the years ahead. And as this relationship deepens, one of the most important questions becomes how far both countries are willing to go to solidify it. Early trade agreements are often cautious, limited in scope, and designed to test compatibility, both technically and politically. But if those initial stages prove successful, the next phase could involve something much more substantial. Long-term supply contracts that lock in pricing structures, guarantee shipment volumes, and create a dependable flow of energy across the Pacific for years, even decades. Such agreements would mark a major evolution from opportunistic trading to structured energy cooperation. For South Korea, locking in long-term Canadian supply could act as a hedge against sudden price spikes or regional instability elsewhere. For Canada, it would provide predictable revenue streams and justify further investment in infrastructure, particularly on the West Coast, where export capacity is becoming increasingly critical. That brings attention to the physical backbone of this shift, the infrastructure that makes it possible. Pipelines, storage facilities, and export terminals are not just background elements. They are the enablers of this entire strategy. Without sufficient capacity to move oil from inland production sites to coastal ports, Canada's ambitions in Asia would remain limited. As a result, projects aimed at expanding pipeline networks and upgrading port facilities are likely to gain renewed urgency. On the receiving end, South Korea's highly advanced refining industry plays a crucial role. The country is home to some of the most sophisticated refineries in the world, capable of processing a wide range of crude oil types. This flexibility gives South Korea an advantage when diversifying supply sources, as it can adapt to different grades of crude without requiring major overhauls. However, integrating new supply streams still involves calibration, testing, and optimization to ensure efficiency and cost-effectiveness. Beyond oil itself, there is potential for this partnership to extend into liquefied natural gas and even hydrogen. Both countries are actively exploring hydrogen as a future energy source, and Canada's natural resources could position it as a supplier of blue or green hydrogen to Asian markets. If that happens, the current oil trade could serve as a foundation for a much broader energy alliance, one that evolves alongside the global transition to cleaner fuels. Financial institutions are also likely to play a growing role. Large-scale energy deals require complex financing structures, insurance mechanisms, and risk management strategies. Banks, investment firms, and export credit agencies could become key players in facilitating this trade, helping to mitigate risks associated with long-distance shipping, currency fluctuations, and market volatility. Over time, a financial ecosystem may develop around this corridor, further embedding it into the global economy. Shipping dynamics themselves could shift in noticeable ways. Increased traffic between Canadian ports and East Asia may lead to new shipping routes, more frequent tanker movements, and potentially even innovations in maritime logistics. Companies specializing in energy transport could see new opportunities, while ports on both sides of the Pacific might expand their operations to handle growing volumes. There is also a technological dimension that could quietly shape the future of this partnership. Digital systems for tracking shipments, optimizing routes, and managing supply chains are becoming increasingly sophisticated. By leveraging these technologies, both countries can improve efficiency, reduce costs, and enhance transparency in their energy trade. This could be particularly important in a world where supply chain visibility is becoming a strategic priority. At the same time, environmental considerations will continue to influence every step of this process. Carbon accounting, emissions reporting, and sustainability standards are no longer optional. They are central to how energy deals are evaluated. South Korean companies, many of which operate on a global scale, face pressure from investors and regulators to demonstrate environmental responsibility. This means that any increase in oil imports must be balanced with credible efforts to offset or reduce emissions. Canada, for its part, may find that expanding exports requires not just building infrastructure, but also strengthening its environmental credentials. Investments in cleaner extraction methods, carbon capture technologies, and emissions reduction initiatives could become essential components of maintaining competitiveness in international markets. In this sense, the trade relationship could act as a catalyst for innovation within Canada's energy sector. Geopolitically, the implications could extend beyond bilateral ties. As South Korea diversifies its energy sources, it gains greater leverage in its relationships with traditional suppliers. This doesn't necessarily lead to confrontation, but it does shift the balance of negotiation. Countries that once held a dominant position may find themselves competing more actively to maintain market share, potentially leading to more favorable terms for buyers. Meanwhile, other energy importing nations in Asia are likely watching closely. Japan, Taiwan, and even emerging economies in Southeast Asia could view this as a model for their own diversification strategies. If Canadian oil proves reliable and economically viable, demand from the region could grow significantly, amplifying the impact of this initial shift. Another factor to consider is how global energy policies evolve in the coming years. Governments around the world are setting targets for emissions reductions, renewable energy adoption, and energy efficiency. These policies will influence demand for oil, investment decisions, and the overall trajectory of the energy market. The partnership between South Korea and Canada will need to remain adaptable, capable of adjusting to changing regulatory environments and market conditions. There's also the human element, the expertise, labor, and collaboration required to sustain such a relationship. Engineers, logistics specialists, policymakers, and business leaders from both countries will need to work together closely. Over time, this could lead to knowledge exchange, joint ventures, and even cultural connections that extend beyond the energy sector. As momentum builds, public and private sector alignment will become increasingly important. Governments can set the framework through policies and agreements, but it's companies that execute the trade, invest in infrastructure, and drive innovation. Strong coordination between these sectors can accelerate progress and help overcome obstacles that might otherwise slow development. Looking further ahead, scenarios begin to emerge about how this relationship might evolve over the next decade. One possibility is a steady expansion, where Canadian oil becomes a regular, significant component of South Korea's energy mix. Another is a more transformative path, where the partnership expands into multiple energy domains, including renewables and emerging technologies, creating a comprehensive energy alliance. There is also the question of resilience. Global markets are unpredictable, and disruptions, whether economic, CSE, or environmental, can reshape priorities quickly. A well-structured partnership can provide stability in uncertain times, but it must be designed with flexibility in mind. Contracts, logistics systems, and strategic plans all need to account for the possibility of change. Ultimately, what started as a shift in sourcing could evolve into something much larger, a redefinition of how two geographically distant nations collaborate in a rapidly changing energy landscape. The decisions made now, in these early stages, will set the tone for what comes next. And as more shipments cross the Pacific, as more agreements are signed, and as more infrastructure comes online, the initial headline begins to transform into a long-term narrative. A narrative about adaptation, strategy, and the constant search for balance in a world where energy remains one of the most critical and contested resources of all.